Good afternoon or good morning, everyone, and welcome to another Fintech Nexus webinar. Thank you very much for joining us today. My name is Peter Renton. I'm chairman and co-founder of Fintech Nexus, and we are talking about a hot topic, a very important topic today, and this is all around minimizing fraud at account opening while maximizing conversions. This is what we all want, right? We all want to let everyone in who is going to be a good customer and remove everybody who is a fraudulent customer. Easier said than done, but we have a panel of experts here who are going to take us through all the steps involved in this process. So with that, let me move over to our panelists and I'll have everybody introduce themselves. Okay, Dan, why don't you go first?
Yeah, thanks, Peter. Hi, everyone. I'm Dan Forte. I'm the head of channel partnerships for the Americas region here at Telesign. Have been playing in this industry now for about 18 years and happy to be here.
Okay, thank you. Jeff?
Hi, everyone. Jeff Soxagal. I'm the Trust and Safety Architect at Persona. I have over 10 plus years in fraud and compliance operations. And at Persona, I help people understand how to operationalize our identity infrastructure. Thanks for joining us today.
Okay, Angela?
Hi, I'm Angela Cornell. I lead the fraud team here at Happy Money, and I have been in various compliance, fraud, anti-money laundering positions for the majority of my over 15 years.
Okay, Ido?
Hey everyone, Ido Lustig. I am the Chief Risk Officer at Checkout. I've been working for fintech companies such as PayPal and the US-based SMB bank Bluevine for over 15 years now. Checkout is an acquirer, issuer, payments gateway, and much more. Generally speaking, we are where the word checks out, and I'm very happy to be here with everyone today.
Okay, thank you very much for that. I also want to say thank you very much for Telesign, for sponsoring today's discussion. Okay, let's set the stage then. Dan, I do want to start with you. Maybe we could just sort of talk about the core challenges facing banks and fintechs today when it comes to onboarding. Can you take us through some of those?
Yeah, a lot of the feedback that we hear or that I hear from our sales team and then also indirectly hearing through our partners that we work with is it's that balance of, like you were kind of alluding to earlier, we want to let everyone in and everyone wants to grow their user base, successfully. On the flip side, you want to do so smartly, but not to the point where the experience you're putting in front of the customer is filled with so much friction that they get turned off and decide that they want to go a different route. So, talking about banks and fintechs, and it's really applicable for anyone that's offering a digital experience. It's not just a battle for the user, for the overall service offering, but it's the entire experience. And so how you're able to go ahead and protect your own business and grow your user base successfully. But like I said, not to the point where you're deterring everyone from wanting to, potentially shy away or not go through the process to onboard. Those are really the core challenges that we see. And so, when we work with partners here at Telesign, we clearly have our own solution set, which is very much mobile focused on providing phone intelligence that companies can leverage to make those smarter decisions. But then working with a partner like Persona, again, depending on the workflow or what's at stake that a user might be trying to get to, that ability to step up or step down by adding or reducing friction, that's where everything really kind of comes into play. And so that's the core challenge that everyone's always trying to solve for, and what keeps us busy on the day-to-day.
Right. Okay. So let's dig in right now. And Jeff, I want to ask you about data. So in our call we had last week, you talked about two different types of identity data, active and passive. So maybe you could explain what you mean by that and how these different types of data should be used.
Yeah, thanks, Peter. Active, and I probably shouldn't map these two together, but hearing from Dan, like sometimes people tend to think of this as like the friction part of like data collection. So it's requires direct engagement from your customers or end users, right? You generally ask for something like a mobile number and then you collect it. Passive data, at Persona, we talk about this a lot within the context of enrichment. So you might collect some helpful intelligence like a phone number, pass that in the back end, by API to Telesign, and then learn some stuff off of that single data attribute, right? So like, hey, is this a VoIP number? Is it prepaid? Was there some recent unusual behavior? Just like additional signals and intelligence that you can gather at volume and continuously is really helpful. So again, you kind of have these two data points, and the way you generally want to leverage these things is for segmentation, right? We're always operating on that spectrum of, like you said in your intro, Peter, do we feel like this business or individual is more legitimate or more fraudulent? Generally, we want to make that a data-driven decision. So let's capture the intelligence, either map that to confirmed instances of fraud or legitimate use cases. And then the oversimplification is treat in kind, right? So you deliver those really nice experiences to your legitimate loyal customers. Fraudsters get quite the opposite treatment.
Right. Got it. Okay. So I want to turn to the fintechs now, who are sort of on the front lines here doing this on a daily basis. Maybe, Ido, I'd like to talk with you first. Checkout.com is a little unique insofar as you are dealing with, merchants who are selling products and then also consumers who are buying. So and there's obviously fraud on both sides of that equation. Maybe you could talk about your approach and what are the differences between onboarding merchants versus onboarding consumers.
Yeah, that's a great question. Thank you, Peter. So when we onboard merchants, we do that with the aim of helping them accept online payments, mainly card payments, but also other means of payments. We take our merchants through a very, very detailed and enhanced due diligence process. They expect that. It's not a one-day integration, even though it's very, very quick and very, very easy. It's a process that takes a few days. We aim to make all data collection as easy as possible, as digital as possible, and we aim to automate as much as we can behind the scenes. But these types of decisions do not happen in real time, even though we can be very, very quick. We leverage online footprint, website analysis, traditional KYB and KYC processes, identity, financial data, and many other data points. We analyze everything using AI. We're using risk specialists, and we make sure that each item is legitimate and makes sense, and also that everything together as a bundle is cohesive and that we truly understand what we see. With that said, when it comes to consumers or the end users, the buyers, they do not know checkout exists. They just want to check out with their whatever merchant of preference. And there we need to make decisions within a split of a second. We leverage online data. We very, very heavily leverage our network data. We work with so many merchants and we see millions and millions of transactions daily, that we have this database that allows us to identify fraudulent transactions, patterns, to see attacks as they happen on one merchant and protect other merchants from similar attacks, etc. So these two processes are quite different. One is very, very heavy, very, very deep, and the other one needs to be very, very quick, but still accurate, such that we do not decline legitimate transactions. That's very, very painful for merchants, and that we do not accept bad ones.
Mm-hmm, mm-hmm. Okay, so Angela, turning to you, Happy Money. Obviously, you've been you're a consumer lender. You must be, it's very, very important that you get this right when it comes to identity verification and fraud risk. I mean, maybe you can talk about how you're utilizing ID verification tools and how you decide on your risk tolerance.
Sure. It can be a lot, obviously, and I think there's a lot of tools out there that you can leverage. A lot of what we found in the fintech space that really helps us is being able to look at some of the device risk before they move too far in the funnel. So, for example, if people are using VPNs, or they're using anonymous proxies, things of that nature, trying to be able to stop them before they get too far, or potential bot attacks. And so a lot of that is using some of the device data and making an educated guess at sometimes that this person is probably going to be risky and we don't want them to go any further. Another way to do that really helps us are things like telesign and being able to validate phone numbers. Is it a VoIP? Are there other risk indicators that are active that we need to be aware of? And then deciding how high that risk is and whether we want to let them continue to move on. And then taking a look at the aggregated risk indicators, such as, the KYC information, the data that's coming back from the credit bureaus, and then all of our other tools that we look at to say, is this IP associated with other known fraud? Is this individual have recent fraud reports been reported on them? And then finding a way to consolidate all that data and create a risk profile. And then deciding based on that risk profile, do we want to not let them move forward? Do we need to apply friction such as ID verification, things of that nature? Or do we feel comfortable enough that we can just let them continue on and go through our regular verification process? I think the biggest thing is consistently looking at it and testing, analyzing what's getting through, understanding, what has been confirmed fraud, where do your false positives sit, and where do you need to make adjustments? It's that continuous testing and understanding what your data is telling you, and then reacting to that helps you stay a little bit ahead of the curve. I mean, always the fraudsters are evolving. There's always something changing. There's always something you need to be aware of. But really being able to visualize that data and understand what's going on and then acting upon it, both in the short term for things like fraud ring attacks and in the long term for your everyday consumers.
Okay, just a reminder to the audience, if you have a question, hit the Q&A button on the bottom of your screen. We will get to audience questions later on in the hour here. So, Dan, I want to turn back to you. Angela mentioned, phone numbers being, really taking hard look at the device where the request is coming in from. Maybe you could talk. Could we talk about phone numbers just for a little bit here and talk about how do you segment and detect like risky phone numbers?
Yeah, so one of our product lines we call intelligence, which at its core, Telesign began as a company with strong focus on end user authentication through SMS and voice channels. So given the global network that we've built out in the last 15 plus years, we've captured quite a bit of data, both real time and a little bit of legacy that allows us to have quite a bit of visibility into literally billions of authentication attempts per month that allows us to really kind of oversimplify the product, put phone numbers in a user into a bucket of, does this person have behavioral attributes that look like a normal person doing regular day-to-day activities, or is this usage more in line with what might be something that's been generated as part of like a bot attack or some automated script, so more machine-like. So by providing those insights along with some specific reason codes around why we provide the risk score that we do, we find a lot of our customers in the industry kind of rely on that as an initial pulse check to then decide, okay, based on what we're seeing from this quick look, do we need to step up? Can we allow them through as is, or what's that most appropriate next step?
So then if someone's using a VoIP number, for example, they're not automatically a fraudster, right? There's going to be some people who are legitimate customers who are using a VoIP number. Like, how are you, like, that might be a risky segment, but not necessarily fraud. How do you kind of differentiate that?
Yeah, so like the line type detection, that's part of the service. And to your point, a VoIP user is not necessarily fraudulent, but that's why we take the added step of looking at the overall behavioral attributes of the phone number in our network. So again, if if it's a number that's coming in and requesting 2FA attempts, but it's a number that hasn't been seen ever, that would raise a flag. But if we're seeing a VoIP number come in, and there's been, kind of consistent usage, maybe amongst multiple customers of ours that are doing 2FA attempts, and that usage is in line with what we would see as good, then that risk rating would be lower. But like I said, that's really kind of the initial pulse check. There are other phone signals that, allow customers to attempt to establish an identity against the number. But in this case, obviously with a VoIP, that wouldn't be the case, which is why most customers we work with will kind of automatically put that VoIP user through a path or a workflow with greater friction, just because of that inability to establish an identity against it.
Right. Gotcha. Okay. And then, how are you you work with Persona, right? You go in as partners. How do you guys work together?
Yeah, so Persona is one of our our awesome co-sell solution partners. So in this case, Persona is reliant on us for some of those phone risk indicators that we've been talking about. So again, looking at behavioral attributes of the phone number, what's being seen in the network world today, other signals that can be useful for onboarding to see if it's a number that's been compromised in some way, shape, or form. So like, has there been a SIM swap event? And then last but not least, is there an ability to establish an identity against that phone number? So many times as part of a sign-up flow, the user is providing their contact info, at which time Persona, or more specifically, Persona's customer can use their orchestration platform to build out a workflow that could check for any or all of these different indicators. And then dependent on what's coming back from the phone channel, then decide, okay, do we need to orchestrate and do an additional step up, let them through, et cetera. But at the end of the day, Persona is adding a lot more what I'd call value add on top of just the phone lens that Telesign looks at the world in,
Right.
and is helping customers paint that clearest picture possible by all the other attributes that they cover.
Right. So Jeff, let's talk about that step up that Dan was just mentioning. I mean, how, look, you're obviously introducing friction with a step up. How do you kind of create a system that can block these fraudsters before they can actually go any further?
Yeah, it's a great question. I mentioned no names, but in my past work lives, some conversations I've had with product managers, they just hear the word friction and then like the conversation gets very hot temperature very quickly. So a lot of what that sparks in me and how it answers your question is I usually try to suggest, okay, let's not lose the utility of the friction. Like it has a place and a purpose. Just need to deploy it at the right point in time, in the right context. And to Dan and Angela's point, leveraging the proper intelligence to inform like how we're segmenting appropriately. So a lot of how we'll see this at Persona is, individual fraud instances. Like if you're looking at it just like an individual identity or an individual phone number may not be as informative, right? If you're like, okay, this seems like Angela's talking about educated guesses, right? Like we might be making an educated guess on like, okay, this is what I think at the moment. Seeing how this maps to other confirmed cases or fraud, like how you can cluster on that, really gives us the ability to step up friction, right? So if you're 1 degree or 2 degrees of separation from like confirmed fraud, you may elect to step up, require an identity document that has a higher insurance. So maybe if you're most customers, you might just request for a driver's license. Maybe you request the front and back of the license, or hey, I'm going to require a passport and we'll check the NFC chip on it, right? So really giving our end users the optionality to like step up as much as they want. But again, make that a data-driven decision, right? Based on intelligence you can learn actively or passively. So hopefully you will identify those fraudsters, direct linkages or otherwise, and then, just thoughtfully block them from your system based on what you know in the moment.
So then maybe we could go to the fintechs then and talk about how this is actually working in reality. Angela, maybe you can go first and just talk about what when you're sort of introducing this friction, how do you think about, when to introduce it and what types of additional friction you should introduce?
Yeah, a lot of it is based on the supervised and unsupervised machine learning, which is critical, I think, in being able to have a successful mitigation system. But it's those ones that are 50-50, where you're not quite sure if they're fraudsters, but they might be. That's where you really want to introduce the friction. So if you know they're bad, just get them out and decline them and move on. But those ones that are in kind of that sweet spot where they may be fraud and they may not be fraud based on all of the different signals that you're bringing in, that's where you really want to introduce the friction. One of the things that we're really combating right now is the AI technology that's just become increasingly sophisticated. So I think what we're starting to find is that oftentimes just taking a copy of the ID isn't quite enough. Having additional functionality behind that really helps, something like a selfie, things of that nature, to where you can really get some of those data elements that you can't just get out of it, like a JPEG or whatever it may be. So once we start introducing that type of friction, sometimes you can do it without even having a human intervention. So they can, you can take a look. If it says that it's a complete fail, or they're sending you a picture of Mickey Mouse or whatever it may be, you can go ahead and decline them and move on. But if it's something to where, the identity looks okay, but it's still a little bit questionable, you can then choose to do the manual intervention. Or if it looks okay after the picture, you can move them on, through the funnel. So I think it's taking a look at your business model and understanding exactly what your risks look like, and then being able to address them appropriately for your client base. That's the biggest thing. I know it's a really big deal for lending, because once the money is gone, it's gone. But I feel like it's particularly important for everybody to first understand your business model, what you're trying to prevent, and then how risky an individual is.
Right, got it. So Ido, for checkout, you haven't got much time. You've really got to, particularly on the consumer side of things, you can't have someone reach for a driver's license at checkout. I mean, what are some of the things that you're doing when you see a suspicious transaction?
Yeah, so I think going back to the question around friction, I think you can talk about three types of friction. There is the friction that is not needed, and you should be able yourself, without any friction, without any step up, to leverage network data, to leverage historical data, behavioral data, etc., to just make a decision. It's not an educated guess, if you ask me. It's a prediction. You predict the outcome, and you need to be as accurate as possible. That's one. Another scenario is when friction is needed and is also expected. I'll give you an example before answering your question. If one of our merchants want to change any of their account details, account information, let's say they want to change their bank account, they want to have money transferred to a different account, they actually expect friction, because any of us know that when you work with your bank and you want to transfer money to a third person, the bank texts you with a 2FA and a one-time passcode that you need to fill in. You expect that. That's okay. You feel protected. Sometimes friction is okay and is good. Even product managers will say that, Jeff. And then the third type of friction is friction that you need to do in real time, like 3DS, right? A customer is about to check out, and something is not 100% right, and you want to step up and you want to send them an OTP and verify their identity. No one likes that. We as consumers, all of us, we do not like it. At times it's needed. And what we do, we try to optimize. We try to leverage what we call acceptance intelligence, which is a suite of products that we have that leverages AI, like everyone does these days, and some other cool technology to optimize for when a step up is truly needed, and when we can use other means to securely approve a transaction. And that's a secret sauce. And we have developed a tool that is called fraud detection just for that. So I think our merchants are thankful for the capabilities we provide them.
Right. Yeah, because that's the I want to stay with you, Ido, here and just talk about the once you have, like, it's one thing to onboard someone new that you've never seen before, and then you talked about with the the established merchant changing a bank account, they'd expect friction. But what are some of the things that you can talk about here about on the consumer side of things as well? Like, how can you kind of you have the onboarding process, and then you have the ongoing customer life cycle. What is the role of of fraud mitigation in that ongoing customer life cycle, and how are you using it?
Yeah, so that's an awesome question, and I think tokenization plays a huge role here for card transactions. When a consumer transacts with a merchant through us, we can tokenize their card such that it's unique to that merchant and that consumer. Next time that they transact, we have in our vault that token, and only that specific cardholder can use that token with that specific merchant. So in essence, what happens is that we treat consumers that we don't know, that we do not directly interact with, as repeat buyers, because we have information on them, not personal information, but we have tokens and we have other ways to hash and use their data and network data also across different merchants to help legitimate players that want to check out and transact. And we are able in such ways to treat them as repeat customers. And that's the secret sauce. If we are able to do that as often as possible, we provide seamless, fast, quick, easy checkout experience to the end buyer.
Right. Interesting. Super interesting. Okay. Let's talk about best practices, right? Maybe Dan, I'd love you to kind of lead this off as far as, when you're like just not like onboarding and as we're saying, and across the life cycle of a customer, what are some of the best practices that people that are listening into this or watching the webinar, what are some of the things they really should take into consideration?
Yeah, I mean, one thing to really be mindful of is cost. If you've built a workflow that is checking the same user over and over and over again for every interaction they have with your environment, you're setting yourselves up for quite a hefty bill. And again, to Angela's point earlier about what exactly it is that is being protected, you want to be mindful that you're not investing so much that you're spending more than what it is you're actually protecting. But being smart about when and where to call for the right kinds of signals, when to step up, that's really kind of at the core of the discussions that we have with not only our direct customers, but also when we work with partners and we share that feedback. Again, it's all about providing that best overall experience that's going to make the end user feel happy. But also you got to keep in mind that you have to introduce workflows that will make it so that the fintech or the bank is not spending more than they should. So it's really just those types of things that we come across quite a bit.
Jeff, what about you? Like, what are some of the best practices that you encourage at Persona?
Yeah, absolutely. I'm going to steal or paraphrase Angela's answer, where it's kind of like the best fraud is the fraud that doesn't happen, like that never enters your system, that hopefully you never have to generate a report upon. And a lot of how we think about that as a best practice is kind of creating a system of record of identity and like your fraud risk profile at onboarding. So oftentimes customers will do this to understand at that point in time, at onboarding, how legitimate or fraudulent we think this end user might be. But that same intelligence can be leveraged later. And this is where we partner with Telesign, at high risk events, like if there's suspected swim swap or something. Hey, let's re-verify and compare to that system of record, right? Like, not to believe overinflate the importance here, but like I worked at a lot of pre-IPO startups in the Valley, and there was definitely a moment like 10 years ago when it was just like grow your growth numbers, like onboard everyone with interesting onboarding qualifications, let's say. I think we're kind of past that point, and we're seeing more of a best practice of like, let's do a little more security up front. So helpful there, but also leverage it ongoing as you understand more about your customer. And I should finish on a positive point. More positively, like if you have a better understanding of your legitimate customer, then you can do those personalized offers, offer them increased credit lines, give them those experiences that they want. So that's what we see a lot at Persona.
Right. So Angela, back to you. And you mentioned, once the money is gone, it's gone with your lender. I mean, it feels like lenders have unique kind of challenges here because if you're loaning someone, say $10,000, $15,000, $25,000 is very different than doing a $50 transaction on an e-commerce site. What is, like, when you're looking at it, like, you haven't spent your entire career in lending, I believe. So when you came to like Happy Money, what are some of the unique challenges you think that lenders face here?
I would say lenders in general, but especially Happy Money, we want to protect our members, we want to protect the applicants, and we want to protect our credit union partners. I mean, those are the three things. And where it's really difficult is getting those notices from someone when they're telling you that they've been a victim of fraud and they're out thousands and thousands of dollars, and now they're very concerned that they're on the hook for it. So where I think it gets difficult is just trying to do everything you can to verify that person is who they say they are up front. Because oftentimes what these fraudsters will do will open, the fake bank account at various institutions. The money goes into the account and then it's gone and nobody's getting it back. So you have multiple victims in this type of situation. And so for us, a lot of it is just trying to gather. I'm a strong believer in junk data in, junk data out. So making sure that you have the most reliable information in front of you from the most reliable sources and utilizing that information to the best of your ability in order to make sure that you're doing the best thing that you can for everyone involved and just protecting people. So I think when you're trying to figure out what's going to be best for you, working through who's going to have the best data in relation to your business, where are they sourcing it from? And then what do you do with that data? So the more you can do up front and the more checks that you can run systematically up front, and then develop a system in which that data makes sense and it's somewhat predictable. I know fraudsters aren't predictable, but the risk data is somewhat predictable, and that you can get in front of risk right when it starts happening for things like fraud rings, like the bot attacks, being able to get notifications that that's happening and stop it before it gets too much further down the funnel. I would say those are the biggest challenges to overcome. No system's ever going to be perfect. You're always going to have a certain amount of loss, but the idea is to stop as much as you can and have an acceptable loss rate.
Yeah, I'm just quick hop in. Angela, the smile on my face is when you're saying fraudsters are unpredictable. I think sometimes your own customers are unpredictable. And how this like makes me think about verifying identities is I think everyone has an example of like your VIP, like your most engaged customer that might also like you've lent the most money to, and everyone like they know the first name of the person, like, oh, there's Dan again. Like, oh, yeah. Sorry, Dan. Not Dan. Let's say Ben. Ben. And you're like, Ben's the best. But if Ben starts defaulting on these, I'm really quite scared of Ben. Like, where can Ben take us? And so I a lot of times how I bring up like that silly anecdote to folks is like, hey, if you feel that discomfort, like that's honest, and that's maybe something that you want to act upon, right? Like, how do we reduce that, like increase our confidence of their legitimacy? Like maybe that's where we step up a little bit, right? Within the right context at the right time. So you don't have these like just worried conversations around the digital water cooler.
Right. Agreed.
But yeah, sorry.
Always just be a gut feeling. Sentiment. Oh, I absolutely agree.
Yeah.
So yeah, I would say just applying that across, regardless of the industry that you're in, understanding who your customer base is, understanding how to mitigate the risk and what types of data that you need in order to accomplish that is key in being successful in a good program.
Okay, so then let's talk about fraud attacks right now, and I'll just open this up to anybody. What are the different types of attacks that people are seeing today or in 2024 that maybe they didn't see as much in 23 or 22?
I'll start maybe.
Okay.
So I don't know if comparing 2024 to 23 or 22 is going to be that different. I want to talk about two types of attacks that we see. One is a retro attack, and then the other one is something that we see. I think everyone sees increasing over time. Let's start with the latter. First party fraud, people that transact and then claim that they didn't do it. People that their family members transact with their cards, and then there is a dispute. It is very, very, very hard to prevent, because typically users or consumers will use their own device, their own IP address, their own everything, and it all looks legit. But then they file a dispute, and it's very, very important to identify repeat offenders that do that again and again, or to identify things that are not consistent with past account activity, even though some of the elements are consistent, and to prevent it ahead of time. Another trend is a retro trend. When I just started many years ago, there was this Nigerian prince scam that was very very common, and everyone was promised some money from a prince or something of that nature. They only provide the prince with their bank information or the card information or something of that nature. So social engineering is back. Why is it back? And it's been like that for a few years now, because of step up, because of friction. 2FA, OTPs, all of that, right, require the legitimate phone holder, card holders to be interacting with whomever, and social engineering is a very strong way to bypass that. Once again, it is very, very hard to combat social engineering if you are in our shoes, because we do not interact with the end user. But that's something that we are developing some interesting technology to help us with.
Yeah, I'll hop in. I know Angela touched on this earlier, but last year I actually gave a presentation on like Gen AI, and I thought it was kind of like fun at the time. And I was like, okay, it's a little early, but I think we're starting to see some indicators. 2024, I cannot escape this. I cannot stress to you how many client or prospect calls are just like, what are you doing? Like, what are your thoughts? Like, how can you help? And where we'll see this manifested is not just the quick production of very high quality fakes, identity documents, but also just like the selfie capture. Like, I think everyone knows it's like a well-trafficked like joke, but like sometimes your fraudsters know your own flows better than you do a lot of the times, right? So they know like okay, I have to look left, look right, smile, or whatever. And the technology they have to assist them through that is like pretty, like, I don't want to go too like scary, but it's very high quality. So it's kind of requiring us in like a defensive posture. How do we account for that and help our customers just appreciate like this isn't like some kind of like FUD sale. It's like it's really happening. And if you haven't experienced it yet, gosh, enjoy. But just let's put some considerations in place if it were to happen to you. Like what would your response be?
That is really interesting. I know that I feel like that we're entering a new era right now, and we need to all be on our toes, it seems like. So anyway, before we go to audience questions, which we'll do in just a second, Dan, I want to talk. I want to ask you about when someone's listening here and they're thinking about moving to a new provider. What are some of the factors that banks or fintechs should consider when evaluating anti-fraud providers?
Yeah, I mean, I think the first step is obviously, if understanding if the provider has services and capabilities that speak to the geographies of your customer base. We're fortunate at Telesign that a lot of our capabilities are global, and we work with a lot of global brands. But I'd say that as a start. Obviously, you want to pick a provider that is going to give you that ability to have flexibility, right? Because like not every user is going to go through exactly the same workflow. There might be different areas of the platform that they're trying to access or different things that they're trying to accomplish. So having the flexibility, to orchestrate for all of that, but also, again, like I was saying earlier, we're very phone centric in our approach to onboarding, account takeover, et cetera. Also having a provider that is leveraging more than just one avenue and looking at a whole different slew of data sources, and also providing those different frictionful or frictionless capabilities. Those are the things that always kind of come top to mind whenever we're in conversations with folks that are looking for a new provider.
Okay, so let's move on to audience questions. We've got a few coming in here. Maybe we'll take on this first one. Considering the technical know-how that fraudsters have, how will we differentiate? How will we differentiate what is not a bot call or generative AI? We sort of touched on it a little bit, but maybe we could go into a little bit more detail. How are we differentiating between bots and humans as it gets more sophisticated?
Yeah, so I'm happy to speak to that. So it really, like I was saying earlier, it really has to do with the overall kind of usage trends of the phone number. But that being said, whenever, like in most cases, if we're witnessing some type of a bot attack, it's not solely related to just one phone number. So for example, a bot attack usually incorporates some type of a number range. So like, for example, my number ends in 5647. You might see requests come from 5647, 5648, 5649. There's some type of repeatable pattern that they're using to try to defeat a system. So having the ability to pick up on those usage trends, understand the overall volume of transactions that a number is trying to make within an hour, within a day, et cetera. Those are all things that help to, like I said, bucket whether or not this is something related to like a machine-like experience or there's actual human experience on the back end. That being said, aside from that, there are some other signals that can help solidify and paint a clearer picture as to whether or not this number coming through is legitimate and not being spoofed. So obviously, understanding the phone number type is one, but given that we pull a lot of our data from mobile network operators around the world, there's also that ability to understand, is this number associated with a carrier network? Are they actually showing up as an active user, or is this number showing up as inactive? Or has this number recently been deactivated and is in the queue for recycling, which would be a huge indicator of fraud if you saw that number coming in, yet the carrier is saying, yeah, this number is not in service on our network. So, but through a combination of signals, you can really kind of start to paint that clear picture as to whether or not, hey, is there an actual person behind this, or is something going on, nefariously through some type of automated script?
And so what? Yeah, go. You can go on, Angela. I'll wait.
I was just gonna say, in addition to that, I completely agree. I also feel like it's important to look at sudden spikes in overall volume that you're receiving. So if all of a sudden, you generally, during certain times of day, you're usually at a certain volume of incoming applications or whatever that is, and all of a sudden there's a huge spike and it kind of levels off and then drops and then spikes again, that can be a pretty good indicator of a potential bot attack as well.
It actually makes me think of what Ido. Oh, sorry. I was
Oh,
going to
hi.
compliment you, Ido. I'll let you answer. But it makes me think too about like looking at those historical trends too, right? Like, should we expect this at this time? If not, friendly tip for those in the fraud space, maybe talk to your marketing team. Did we put out some kind of promotion that maybe we're not aware of? So you're inviting the spike. It might not be a bot. But performing those comparisons can be helpful once you get that early indicator that something's spiking. It may be legitimate, hopefully.
You know, you have
And
anything to add?
yeah, I agree with everything that everyone said, and I just wanted to add a couple of points. One, you use what are bots? Bots are AI or advanced machine learning, right? You can use the same technology to counter and fight and identify bots and some other type of generative AI attacks. So you train your machines to identify these. Also, I can give an example. We have an identity verification solution at checkout, and we use AI to identify deep fakes. So if people use deep fakes and create videos of themselves, in order to pass our IDV solution, then we have a technology that is able to identify that. Because at the end of the day, and it's not bulletproof, always there is going to be some leakage, but at the end of the day, everything has a pattern. People behave in a way that people behave, and still today, and I think next year or so, maybe 5 years from now, not so much, machines behave like machines. And it's getting harder and harder, but if you harness technology, then you're able to be ahead of the race or leading the race, and you can fight fraudsters. If you ever stop to think that you're good and great and there is nothing you can do to improve, then you will very, very quickly lose the game.
I would hope there's nobody out there who thinks that, because this space is moving so fast right now, it feels like. So what I was going to ask as a follow-up there, Dan, was I'm curious about the output, like the phone number. You go through all these different checks and processes. Is like you said, I think you said you do a score or something, and then it's up to obviously the end user to decide, okay, the rest of this stuff looks fine, this phone number is getting a low score or whatever. I mean, how's it implemented is what I'm saying in practice.
Yeah, I mean, everyone kind of tends to implement it differently, but in terms of an output, we have the ability to produce an overall risk score. So anywhere from 0 to 1,000, the greater the score, the greater the risk. We also will return back what we call reason codes that map to a much more specific definition of why we gave the score that we gave. And then lastly, we provide a recommendation of based on everything that we've seen, block the user or flag it for further follow-up or just allow them. In terms of an implementation, we have some partners that act just off of the score itself, and then others that actually look at the reason codes and focus on those granular level details and kind of set their own thresholds that way. Again, kind of going back to that specific workflow and what exactly it is that they're trying to protect at that given point in time.
Yeah, another Jeff joke time. Dan did not ask me to say this, but I genuinely believe this. If you use a score like Telesigns, I might advocate just using the score itself and seeing the utility you get out of it. I certainly in the past, I've been guilty of this too, where you kind of put your thumb on the scale with the score with, oh, well, let's use the score and combine it with some like loss potential or exposure. And you kind of start like working away from the score itself, and you get unpredictable results, let's say, or maybe, you introduce more false positives than you think. So maybe start small in that respect on a new piece of intelligence, like find the utility of it, see how it segments, and just treat it on its own before you start making these elaborate calculations on your own that might not lead you where you want to go.
It's a good point, Jeff. Maybe Angela, I'd love to kind of get your perspective on this, where like, are you going for zero fraud, or do you have like, you don't have to share exactly, but I'd love to get a sense of what do you consider acceptable? And, does that change, or do you have a pretty a firm percentage of this is acceptable fraud, like a level?
Yeah, it's a really good question, and it's something that we've been talking about quite a bit. And I think on average, obviously zero fraud would be great. I just don't think that's realistic. So
yeah, but if you do zero fraud, you're probably losing legitimate people.
Oh yeah, there's no way. So you're just on average, industry wide, it's usually around 5 basis points, between 5 and 7. In 7 probably in more complex economical times like we're in now. Ideally, I'd like to keep it lower than 5, especially with just to be conservative and to make sure that we're doing the right thing. But on average, around 5 basis points, I'd say would be an acceptable fraud loss rate.
Right. Okay. Okay.
And
So
Peter, if I may add, right?
Yep.
I think as long as you're within, as long as you are compliant with rules and legislation, and you're not doing anything that you're not supposed to be doing, which is super important. Fraud and credit loss and any other financial risk related exposure is a business decision that you're making. You
Right.
can make a decision, as you I think said yourself, right? You can make a decision to have zero fraud, and kill the business. That's a very bad decision.
Yeah.
Or you can make a decision to this year grow a little bit more, which means you are willing to accept a bit more fraud. I think what is tricky and what is our role as risk people is to make sure that we understand the business needs and that we protect the business exactly as expected. We do not have too high false positive rates, and we do not introduce too many true positives, which is bad.
And to add to that point, I completely agree. And also just if you think about what your consumers will think of you if you let too much through, it's a bad experience for everyone. And so finding that risk-based approach to where everybody's comfortable and you're doing the right thing for the consumer and for the business and for your partners. It's definitely not a magic number, but there's a goal.
Okay. So a couple more questions. Actually, someone's asked about doing a demo. We are not doing demos on this webinar. I'm sure that Dan or Jeff would be happy to reach out to you about that. What are some recent success stories about fraud prevention that you can share? That's probably one for you, Dan.
Yes, I mean with Persona, we have a couple of pretty nice success stories. One with Branch, which is a digital banking platform, and the other is Slash, which is a fintech provider. Fairly simple use case, but Branch was really just wanting to understand more about the phone numbers coming into their environment, and made it a rule. All right, if it's a VoIP number, we don't want to associate, and we need to step up that way and get to a better path, which has been quite successful. And then similarly, with Slash, based on a specific workflow or an end user's desire to maybe make a substantial transaction, having that ability to escalate to a phone risk determination to kind of make that final call of like, all right, do we let this go through? Do we add more friction, or what do we do? Those have been two of the more notable wins that we've had together.
Okay. Okay. So I want to close by having you I want to ask about the future, and, is there anything we can do to stay ahead of future fraud attacks? Who wants to take that one?
Yeah, I can give a quick answer to let other people think. I expect change is how I stay ahead, right? But how this could manifest at your business is having systems that are configurable, when again, not naming any previous managers or department heads, but when I had frustrations in the past when fraud events were happening, it was usually because I didn't have a response to the attack itself, or I didn't know why, like the origin of the attack, like I didn't know how to actually go about addressing it. So when you think about, we're talking about there's tough economic conditions out there. Ido touched on this, right? Which your own customers might be not so kind to you at the moment. Plus Gen AI, like having the ability to put some safeguards in place, but edit and tune in real time becomes like honestly very paramount. So again, I am not saying I know what will happen. I'm saying something will, and just being able to react, adapt, and alter experiences in real time becomes super paramount to So I guess it's not really staying ahead. It's like reducing time to change becomes very critical.
Yeah, I couldn't agree more. And I think three concepts or basic principles are important here. One is monitoring. Monitor your portfolio, monitor your customer base very, very closely, so you can identify, like Jeff said, things very, very quickly and start reacting. Number two is control groups. Have control groups in place such that you, or A/B testing or ABCD testing or whatever you want, such that you can see different behaviors and different trends as they emerge. And number three, something I believe in is honeypots. Try to have fraudsters come to you so you can identify their MOs quickly and then react. And of course, never rest. If you rest, it's a race and they will just pass you.
Okay, well, that's a good place to leave it. Ido, really, thank you very much for that that good closing statement there. I want to thank Dan, Jeff, Angela, and Ido. Thank you very much for all of your insights today. Thank you so much for Telesign for bringing us all together here. And of course, thank you for the listener or the viewer here. Appreciate you tuning in. Have a great rest of the day, everybody. See ya.